Welcome to Richard Suttmeyer's 4 in 4. 4 blips on my radar screen presented in 4 minutes or less. My first blip critiques 2 days of testimony by Fed Chief Ben Bernanke. General Ben says that inflation will become contained, that there will not be a recession, but there could be some bank failures. We are not in a recession yet, but in my opinion, we will be. I have been warning that there would be bank failures for almost 2 years now. Talk of further rate cuts put pressure on the dollar and has fueled commodity speculation. Gold hit a new all-time high this morning at $978.5 the ounce. Crude oil hit the stratosphere of 103.05 per barrel. The dollar traded a new 52-week low against the Japanese yen at 104.07, and the euro reached an all-time high of 1.5237. These markets are telling Bernanke that his monetary policy is on the wrong track. My second blip shows that the Dow transports derailed below the 200-day simple moving average at 48.44. The transports tried to break out above its 200-day almost daily in February, but could not. The 50-day simple moving average is key support at 45.50. While transports ended Thursday up 2.3% year-to-date, the Dow is down 5.1% as of Thursday's closed. The Dow is below its 50-day simple moving average and my annual pivot at 12,656 and 12,670. Key support today is the 5-week modified moving average at 12,558. My third blip shows the topping out patterns for housing and financial indices I track. The Residential Housing Index, HGX, is above its 50-day simple moving average at 138.15, with my quarterly pivot at 141.04 and the 200-day simple moving average at 169.69. Earlier this week, Lehman Brothers initiated coverage of several home builders, including overweight ratings for D.R. Horton, Ryland Group, and Toll Brothers. Value Engine rates the first two strong sells and Toll a sell. The Americans Community Bankers Index, ACBQ, is a market-weighted basket of more than 500 smaller publicly traded FDIC-insured financial institutions, and these banks are overexposed to construction and development loans. Yesterday I showed that 2,368 FDIC-insured institutions had construction loans exceeding total capital. This is the likely universe from which bank failures will occur. My monthly value level is 217.05 with the 50-day simple moving average at 229.75, my monthly pivot at 233.27, and the 200-day at 257.37. The Regional Banking Index, BKX, which represents 24 regional banks, including Bank of America, Citigroup, JP Morgan, and Wachovia. Remember that Bank of America and Wachovia reported 95% and 98% declines in net income back on January 22nd, which in my opinion was the catalyst for the pre-market 75 basis point rate cut by the FOMC. My monthly value level is 83.28, with the 50-day simple moving average at 87.12, a monthly pivot at 90.02, and the 200-day at 101.74. My fourth blip reiterates my opinion that there are no market decouplings. The iShare FTSE China 25 Fund, FXI, is below its 200-day simple moving average at 155.55, with my quarterly pivot at 155.03, and the 50-day at 156.84. A bearish crossover where the 50-day declines below the 200-day is imminent. Send your comments and questions to support@rightsideadvisors.com. That's today's 4 in 4. Enjoy your weekend.